Hello and welcome to Street Smart. If you want to learn about how to be smart with your money and learn about stock market investing, you are at right place. This is a small course which will give you information about stock market basic. With that, let's get started. Welcome to the introduction to the stock market short course, and this is the third video of the series. In this video, we will go over a circle of competence, fundamental analysis, evaluation of business model, evaluation of management, economic moat, and risk factor involved with the investment. So, what is the circle of competence? So, I'm no genius. I'm a smart in the sports, but I stay around those spots. This was said by Tom Watson Senior, the founder of IBM. So, it is a kind of concept or a circle, imaginary circle, which your expertise lies. So, subject area that matches your skill expertise. Define the parameter circle of competence and operate inside. So, how to build a circle? First, you need to understand what your study domain is. Like for me, it is engineering, technology, and supply chain. The work that I do is data analysis, semiconductor related, chips, softwares, electronic device, and retail. Time I spent is on social media, games, stock, sports. Money I spent is on shopping, clothes, and etc. And popular food chain to have some good food. And so the company from there you can find, like for example, Caterpillar, Apple, Nvidia, Micron, Walmart, Microsoft, Instagram, Netflix, Starbucks, Chipotle, or Amazon. You might be familiar or use the product or service of those companies. It depends on based on like your education background and work, and as well as the time you spent. With experience, expand the circle, but never fool yourself where it stand today, and never be afraid to stay within the circle and say, I don't know if something or any company that is out of your circle of competence. So here, as you can see, there are four circle and there is an interaction point, and so that can be found your like we can build a circle knowing this the company that falls under this interaction area. So fundamental analysis is the analysis derived to derive a fair value of the stock. Intrinsic value or fair value is a true or fair value or price of the stock. Fundamental oriented strategy, there are two, that is growth and value related. So growth investor like Kathy Boot focuses on the prospect of the company. They believe like kind of the in future the company would able to generate a good profit, and from that the stock price would uh, go high. They believe in that. And value investor are based on current financial performance or market. They evaluate the stock price or intrinsic value, and based on that, if the my intrinsic value is below that price, they invest. Otherwise they wait for the time when the price fall below intrinsic value. Fundamental factor qualitative to understand the quality standard or nature of business model, economic mode, management performance, industry sector, eccentric risk factor, and internal risk factors. Quantitative analysis can be done using the information that is found, uses the number, figures, and ratio or formula. That information can be found on financial statement like balance sheet, income statement, statements of cash flow. This all like quantitative and quantitative analysis. The information you can get from the financial statement, that is 10K, 10Q, 8K reports. The 10K is basically the annual report published by company. 10Q is a quarterly report published by company. 8K is during a financial year if they invest or buy in any other company for investment. They are all listed in 8K reports. So business model. Why we need to evaluate business model to understand the plan for future earning growth. So in order to understand the business model, We need to look the problem it solves, identify general business model, the kind of what industry sector it is operating, type of product or service it is selling, type of customer itself. For example, some might be directly serving to end customer, end consumer like us, or might be their customer, might be a business. So you need to understand it is B2C, P2P, or any other business model. Way customer use a product or service, distribution, promotion strategy, operational tasks to perform, resource and capital requirement of profitable and revenue is generated by company, business and strength and weaknesses, business model performance that would help you to evaluate business model, management team performance, the investor opinions, shareholder letters, earning transcript, QA section, etc. You can need to understand like historically in the past what management was saying and fast forward today what from that what successfully they implemented, and also they need to understand how kind of they are invested in the stock, or you can find that using the proxy DEF 14A. And you also need to consider like which is the industry sector, because the management performance vary from industry to industry. To understand the industry-wide goals, competition, regulation, business cycle, learning how the industry work will give an investor deeper understanding of company's health. So what is company moat? A company must have durable and competitive advantage that protect it from attack like moat protects the castle. This was said by Warren Buffett. So the competitive advantage over its rival which help a company's operation or generate the earning for a long period of time is called economic moat. So how can we, or what are the source of moat? First is intangible asset. It is the brand recognition, pattern and regulatory license it is holding. Network effect is the value of product or service grows as its user base expand. For example, Apple and Microsoft. Cost advantage is ability to produce products or service at a lower cost than competitor. For example, might be Walmart. Efficient scale is the market limited in size, potential new customer having little initiative to enter because doing so would lower the industry return below the cost of capital. It is the kind of new player needs to like if he enters the market, then the profit he would be generating is below the cost of the invested capital. This can be a SIM card business because every market is saturated almost. Once the potential competitive advantage is identified, find out how rare it is, easier it is to replicate the faster competition catches up. Risk, internal risk factors. So you need to understand what are the major risk factors involved. Human capital, cyber security risk, like as we all know, there might be hacking can be done. So you need to be understand if business is prone to that one. Physical asset, controlling shareholders. External risks would be economic crisis, natural risk, political, like the, as we can see, like business. Few business have kind of struggling to generate revenue based on US and Russia relation as well as US China relation. So yeah, that kind of is risk also involved. Competition and market fluctuation. Based on these all factors, now you should be able like kind of make prediction for 10 or more years from now. Does the you need to ask the question like what is the future of company? Does or it would increase the earnings at a constant growth rate, and what is the progress in product market share in the future? So yep, this is it for it in this video. If you want to learn about investing, then please do consider subscribing this channel. If you like video, then please like, share and subscribe to this channel. Thank you.